Kangaroo Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Hello, welcome to the COB this Wednesday afternoon. Lovely to have your company. I'm Juliette Sarli. Let's have a look at where the local market is finishing the day's session. We do have these higher oil prices. We have the reaction to the RBA decision yesterday, the expectation the Fed will remain on hold tonight. All of this contributing to about 1/3 gain. We did see a bit of a dip around 11, but things started to ratchet higher towards the afternoon session. The ASX 200 gaining around 30 points or 0.4%, and certainly a lot of momentum coming through in those tech players that did well on Wall Street overnight and in the energy space as well. And in fact, 10 of the 11 sectors moving higher today. Only healthcare, that defensive sector, under somewhat of a little sell down, but I would note that that's only about 1/4% drop. So let's get into the themes of the day today, and it really has been these oil-fueled gains. We are hearing these continued news of strikes in the Strait of Hormuz, Iran strikes on the UAE as well, all of this contributing to higher crude prices and expectations that maybe this conflict will drag through until the end of April. We'll discuss that with Mark Gardner from MPC Markets, who's coming up shortly, but oil still holding around $103 a barrel. Some C-suite changes today as well at two of our big companies, including BHP and Woodside. So we've got Brandon Craig to replace Mike Henry from July at BHP. And we've also got Liz Westcott, who's been in the role at Woodside since Meg O'Neill left to BP in December. She's clearly been doing a great job. She has been handed the reins of that full time. And of course, Powell's play as we look ahead to the Federal Reserve interest rate decision. Markets, of course, thinking that given what we're seeing in the Middle East, we will see a hold coming through from the Fed. Let's have a look at some of the sectors, particularly amidst the oil price rises. We are seeing some gains in energy stocks, although Woodside is a little lower today, down 0.5%. It was up earlier on that CEO news, though, so potentially just a little bit of some profit taking there. Looking at tech, though, they all did very well today, with the exception of WiseTech. Technology One, they're up by 1.5%. NextDC up almost 4%. And looking at some of these consumer stocks in the wake of the RBA interest rate hike, we've also got higher petrol prices to contend with. What is all of this going to mean for a lot of the consumer discretionary stocks? I actually had a really good chat to Fergus Humble, from Morgans earlier. He likes Lovisa, thinking that it's very cheap at these levels. Well, some of the corporate stories, of course, we touched on BHP appointing Brandon Craig as its next chief executive, and Woodside appointing Liz Westcott. Macquarie Group also in focus. Reuters reporting it's pulled out of bidding for a stake in Kuwait's oil pipeline network. And Sims on track for its best day in over 4 years on its earnings outlook. Elsewhere, we're watching CSL. It says it's facing a temporary global shortage of one of its gene therapies. Mnemonics coming under pressure as well, receiving a notice from the NASDAQ that it's not complying with the exchange's minimum price bid requirement. And ARN there, pretty unchanged, but there was a bit of a reaction in the sense that Kyle Sandilands does say that he is going to be suing over his contract. Worth noting, the payout on his contract is $90 million. The market cap of ARN Media, $106 million, so it'll be very interesting to see how that one plays out. All right, let's welcome to the COB Mark Gardner from MPC Markets, who joins me now. Good to see you, Mark. A little bit less of a volatile day, I guess. Only, a 0.4% gain. At least it wasn't wild swings, I guess, that we've been used to of late.
Yeah, the last couple of days have been, thankfully pretty quiet. So it just enables us to catch up a little bit because. Every time you looked away from your screen for about a week there, the market would move, and because oil would be bouncing around the place, and everyone would be watching, watching certain strikes or movements in Iran, in the Middle East, etc. So oil's pulled back another 3% today. It's back towards 90. Probably getting pretty close to buy territory, I would have thought. They are allowing, it's only a disruption, it's not a full closure of Hormuz, but overall, I would say that, we've got poly markets showing around about a 20% chance of this thing being finished by the end of April. So that's going to put it at 8 to 10 weeks at some stage. Trump said he's giving up on the Allies, and I don't know how much giving up there was. I think everyone said no, basically. So
everyone said no to sending ships, didn't they? I really like these graphics you've sent us. Maybe we'll start with the ones that showed us what happened early on in terms of what the Hormuz. Well, you can discuss here.
Yeah. So basically, this is how the closure propagates through the economy, essentially, and we've got a little interactive HTML or page or research document which you can get on our website. So essentially you can move that little toggle and it'll show what effects it'll have on certain commodities, certain sectors, etc. But and importantly, global CPI there sort of in the middle at 0.44. So obviously as that extends out to, we've only really put 16 weeks there. We've used the last, we've essentially used the 1970s and 79, which was in a fairly extraordinary move up and the worst period of stagflation in history, but also overlaid both the Iraq wars, both the Crimea annexure, the Ukraine, Afghanistan, etc. So it's all data backed, and basically what it just shows what a supply, constraints on oil will do and a spike in oil prices will do to the economy, to each sector. I think precious metals at the moment are showing, are looking fairly cheap. We've had an extraordinary run, and which is probably why it hasn't really gone on with the job. I can kind of understand why the miners are a little bit softer because obviously they've got input costs rising, but these guys are still making 100, 200% margins. So I wouldn't expect them to stay down here too much longer. Materials and energy really at the 4-week mark are the only things that should really have any sort of bid tone. But we've had a broad sell off, and I think the market is worried about stagflationary characteristics of the economy, which is never good for equities. But as you can see there, we're starting to get up to CPI uplift after 10 weeks is nearly 1%. We start going into deep stagflationary territory, and that's really where we are looking at this thing only being a 20% chance of ending at the moment, and it's going to cost the global economy about 1.2 trillion or thereabouts. So these are estimates. It's very difficult because a lot of these are very historical examples, etc. But yeah, and as you can see there, precious metals and energy really do kick on quite hard there. And then those materials, particularly locking down supply chains for materials, is very characteristic of this sort of this style event. And then healthcare being a defensive sector would probably be about the only other one there. So we have had a bit of a bounce in a couple of the smaller biotech names like Telix, etc. But that's the sort of thing you need to be looking out for, just in case this tends to drag, or if this drags on, and particularly if Trump talking about taking Cuba as well, whether that's just a distraction or whether he starts doing something on two fronts. I mean, we've got to remind ourselves it's only the 18th of March. This is the third massive geopolitical situation he's put us in, and we're not even a quarter through. Yeah,
indeed. With that in mind, with everything that you just mentioned, with what you and I were talking about off air, how much more we're going to be paying for petrol prices, I don't need your thoughts on whether the RBA did the right thing potentially, but what does it mean for retailers, for consumer stocks?
They've been fairly battered down. I mean, the likes of Wesfarmers is down nearly 20% in recent times. Temple & Webster's has had an almighty whacking, really. That bounced back there, but I mean that stock was in the mid to high 20s at one stage. So, JB Hi-Fi as well was about nearly at $120. So, it's similar to the software stocks, I think, whereby basically the damage had been really done. A lot of those that switch to value out of growth was really playing out already, and they were probably already there, I would say. But I don't think in terms of the consumer stocks, it's definitely going to take away a lot of our disposable income. It's going to increase prices. And then I think in terms of the RBA yesterday, that was due to domestic. I think that decision was already made. I don't think they were taking Hormuz into too much account at this stage because it can just be flash inflationary and transient. But the longer it goes on, the more it probably ends up being, depleting growth over time, and possibly not necessarily a reason to ease, but definitely motivation to not have to tighten, because fuel prices and that inflation will probably do the slowing down for them.
Yeah, it's interesting, right? Because it just almost seems that back-to-back hike plus what fuel prices are doing, I mean, you've got to ask yourself whether or not even cuts are going to be on the radar down 6 months' time.
Well, that's the thing, is that, I mean, if this does continue, say it goes 18 weeks or something like that, we're looking at emergency cuts. So we're just factoring in the inflation at the moment, and expecting it to be over, because that's what Trump repeatedly keeps saying. But it will definitely have, throw a huge bucket of water over any sort of growth. And people's disposable income, and businesses will have to start firing, etc., because they won't be able to afford to keep people on. So, there is a point where it ends up having the reverse effect, and hopefully, we saw in the 70s they did cut, and it was actually a mistake because there was a second conflict. So, I would not want to be a central banker at the moment.
Me neither. Probably never, actually.
No, I'm with you.
Lucky we didn't follow that path.
Not smart enough.
Exactly. I'm saying on behalf of myself. Mark, thank you so much. Mark Gardner from MPC Markets. Getting back to the equity markets, the stock of the day was Sims Metal, and Andrew spoke to our experts, Andrew Weiland from DP Wealth Advisory, Henry Jennings from Marcus Today.
Sims is not one that you always think of in terms of higher metal prices. The recent results was a beat on some metrics. Operating estimates were better. Net profit, though, was a little bit below some of the forecasts, with a higher tax rate. And but clearly, they're doing all the right things. They're not having the same problems in terms of higher fuel prices at the moment, and higher commodity prices. Good for them, and the memory chip side of things as well. It's certainly not one that I considered there with their life cycle business. So brokers tend to have a higher target price on this one.
I like the fact that the CEO, he's not so new anymore. He's been in the chair since October 23, but we'll still call him new. Couple of years. What's a couple of years between friends? He has been continuing to add to his holdings, so we like insider buying. Certainly that chart looks pretty positive as well. So I'd actually have this as a buy. I agree with Henry. Ideally, you could get it a bit cheaper, but you'd have to think there's going to be a whole raft of broker upgrades. They're in the right space. They're performing well. So it's a buy.
You've worked hard for your money all your life. Now your money needs to work hard for you. Whether you're building, transferring, or drawing down, the right information makes all the difference. At Ausbiz Retire, you'll find the latest news and insights from trusted experts all in one place. Ausbiz Retire is powered by RAN, retirement income done differently.
All right, let's have a look at the leaders and laggards on a positive day. Drone Shield coming up, no surprise there amidst what we're seeing and the continued escalation in the Middle East. Sims Metal we just touched on as well, up 10%. Now, a lot of the travel stocks did well on Wall Street. Web travel rising by some 7%. And New Hope, of course, yesterday was hit a bit on the back of its result, but coming back today, up 6%. The laggards today included IperionX, Pro Medicus. Mark was just telling us about some of the sell down coming through in the healthcare stocks, and Domino's, maybe less pizza given higher petrol prices and high interest rates. Let's have a look at the small end of town, and some lithium players looking very solid, including Atlantic and European, while the downside today, or the laggards, included Tetra Therix, Pacific Edge and Tanami Gold. Well, tonight, of course, we do get the Fed rate decision. Look, a hold expected at around 3.75%. It's really going to be more about what Jerome Powell says in that after meeting press conference. The Bank of Canada also holding their policy decision. They're expected to hold at 2.25%. And some factory price figures, US PPI expected to slow 2.3%. Tomorrow we get the jobs number coming through, also the Bank of Japan interest rate decision, and IperionX holding its AGM. Let's recap where the market is, up by 1/3 And Mark did point out that in the last sort of 20 minutes or so, we've seen quite a bit of downward pressure coming through in oil futures. So Iraqi and Kurdish authorities have agreed to resume oil exports, and that has sent US crude to around $94 a barrel, and Brent also down. So certainly coming off that earlier gain that we had seen in the crude oil price. So much happening in that oil market. Also seeing Iran striking Tel Aviv with cluster warheads in retaliation for killing its security chief. We will continue to keep you updated what's happening in the Middle East, and of course what will happen with the US Federal Reserve tonight. We'll be back from 9:45 a.m. Eastern tomorrow.